Hey, hi, this is Kirubakaran Rajendran. Welcome to Trading with Groww channel. In this video, we're going to talk about an option trading strategy with respect to Bank Nifty, where I'll explain about an option selling system as well as I'll try to explain about an option buying system. So, if you're a person who's having a relatively lesser capital, you can focus on option buying. And if you're a person who's having a relatively higher capital, you can mix these two strategies together, option buying as well as option selling, that can generate a higher returns. If you observe the markets, most of the time you could see the initial 1 hour between 9:15 to 10:15, the market gets into a highly volatile phase. It can go up sometimes, it can go down sometimes, it can go up and go down immediately. So when you trade during the first hour, there is a chance of stop loss getting hit very often. So we are going to avoid this first hour volatility and focus after this first hour how the market is going to be, so that it will create a range on the upside, on the downside, and once those ranges broken, we are going to get into a trade. So this way you can reduce the number of times the stop loss is going to hit, and also it increases your overall winning accuracy. And the second thing is, by avoiding the first hour volatility, it can be really helpful for both the systems, option buying as well as option selling. So first, let's get started with the rules of the trading strategy. So first we'll explain what is the rules of the strategy for option buying. So there is two boxes that you are seeing, the box number 1 and box number 2. In box number 1, I have mentioned what is the rules for buying a call option, where I have mentioned one lots, and then I have mentioned the position which is buy, and the option type I have mentioned call option, and the expiry, we are going to trade this expiry on weekly expiry, and this is going to be at the money strike. And the stop loss percentage, I have used 50% stop loss on the underlying premium, and trailing stop loss I have used 50-50, which means that whenever there is a 50% increase in the price, the stop loss will also be adjusted towards 50. So that is what we are using as a trailing stop loss. So now we are using the range breakout mechanism, where I have mentioned the timing as 10:15. So which means that from 9:15 to 10:15, this 1 hour, we have to wait and observe what is the high price of that specific ATM strike. And then if that specific ATM strike high is crossed, we are going to buy it. Similarly, for put option, the same rules applies, where you are going to buy the put option of ATM strikes, where you are going to wait from 9:15 to 10:15 and see what is the high of that particular ATM strike. And when that ATM strike high price is crossed after 10:15, we are going to buy that strike. So the rules are pretty simple, because here what happens is either you will buy call option or you will buy put option. Because if the call option high price is crossed and if it moves up, what happens is market is in a bullish phase. So obviously the call option buy will be triggered. But put option will not be triggered, because the put option high will not cross. When market goes up, put option will decay, so only call option will be chosen. So this way you are either going to buy a call option or a put option based on the market movements. So let's consider this. Bank Nifty opens around 9:15 at 40,050 level, and by 10:15 it is around 40,200 level. So between 9:15 to 10:15, Bank Nifty has moved towards a high of 40,500 levels and moved towards a low of 40,100 levels. Now what happens is, after 10:15, we are waiting for this 1 hour and this range is formed, high and low is formed. Now if this 40,500 from 40,200, if Bank Nifty starts moving up and crosses this 40,500 level, then we will buy this call option strike of 40,500. If Bank Nifty from 40,200, instead of moving up, if it goes below 40,200 and touches 40,100, then we will buy P strike, which is 40,100 P strike. These are the at the money at that time, right? So we will be buying these at the money strikes. In case if high is breached, then we'll just buy 40,500. If low is breached, then we will buy put option. So this way we will know. You just have to monitor these two strikes and check if those respective strikes high and low is breached. So instead of checking the spot, which is instead of checking the 40th Bank Nifty spot, you are checking these two strikes, overall high price and low price. If this strike 40,500 CE strike high is crossed, we will simply buy CE option. if this strike 40,100 put option strike, if this one is high price is crossed, 40,100 high price is crossed, then we will buy put option. So basically when the market is going up, you are buying call option, and when the market is going down, you are buying put option. So consider we are buying it, say suppose 40,500 strike price, call option strike price is triggered where the market is going up. So 40,500 call option high price is crossed. So we'll just buy that specific strike. So we'll enter at 300 rupees. So we are going to use 50% of our entry price, our stop loss. So if 300 is your entry, then 300 50% of it is 150. So 150 will be your stop loss. Same thing for put option also. So you check whatever the entry. If the entry is at 400, then your stop loss will be at 200. So you will buy these call options or put options. If the market is going up and crossing the 10-15 range high, then you will just buy a call option. If 10-15 range low is broken, if the market is going down, then obviously put option is going to give you the signal. And once you enter, keep 50% of your entry price as a stop loss. So these are the entry rules. So all you have to do is wait from 9:15 to 10:15 and check what is the at the money call option and at the money put options. And if those specific strikes high is crossed, say suppose for an example, if at the money call option high price is crossed, which is from 9:15 to 10:15, you are checking what is the at the money strike, and if that at the money strike high price is crossed for that call option, you just buy that call option. Similarly, if that at the money strike for put option, if that specific put option high price is crossed, you're going to buy that strike put option. So this is how it is, and once you have entered, keep a 50% stop loss, and your exit should be by 3:15 by end of the day, because it is going to be an intraday options. You're not going to hold it overnight. So this is the overall rules. So let's see what is the overall performance has been. So this is the overall returns of this option buying strategy, where from 2017 to till date it has been tested. The green line that you see is actually the overall cumulative P&L. So which has generated more than 3 lakhs of profits in the from 2017 to till date with one lot, with this option buying system with Bank Nifty weekly options. So this is the overall maximum drawdown of the system. Maximum drawdown is nothing but how much percentage it has gone down over the period of time, where initially the overall maximum drawdown was around 10,000 to 20,000, but post that it has reached a maximum drawdown of approximately around 70,000, but still it has recovered from that totally. So with respect to option buying, there could be few months where it can go against you completely, but still it would recover. So that is why it is essential to stick to the strategy in spite of having a streaks of losses. So it is always wise to follow the system and its rules. So with respect to this option buying system, the overall maximum drawdown is approximately 70,000 that occurred during 2022, and eventually that also recovered from drawdown. So this is the overall yearly and monthly returns for this option buying system, where in 2017 you can see from January to December how much it has given, where it has given approximately 16,000 profits. 2018, so 2019 and 20, where the profit for that whole year is much higher, where it has generated more than 2 lakhs of profits for those 2 years with very minimal drawdown. So whenever the market gets into a huge volatility phase, these option buying system can give you phenomenal returns. So 2021 it gave again 15,000 returns. 2022 it is around 20,000. So 2023 it gave around 34,000 of overall profits. So this is the overall profits for this option buying system. So days or periods like high volatility period, where 2019 and 20, this strategy has did phenomenally well, considering those high volatility period. Option buying triggers, and when the range breaks out, it gets into a huge trending phase. So this system completely captures those breakout moves and makes high profit whenever a big volatility happens. So this is the overall monthly returns and yearly returns for this option buying system. So this is the performance metrics, where you're able to see it has generated almost 3.38 lakhs of overall profits, and the average profit is approximately 200 rupees, and average profit on a winning trade is 2100, and average loss on a losing trade is 1200. So when it makes profit, it makes higher profit, and when it makes loss, it makes a minimal loss, and the maximum profit that it has made in one single trade is 22,000 rupees, and maximum loss that it has faced in one single trade is around 12,000, and the overall maximum drawdown is around 67,000 rupees. And these are the other metrics like expectancy ratio, returns to maximum drawdown, maximum winning streaks, where the back to back how many number of trades this strategy has given profits is 8 number of times, and back to back how many number of days that it has given maximum losses is 7 times it has given maximum back to back losses. So we have seen the option buying system. Now we will see the option selling system, where if you club option selling and option buying it together as a strategy, that can give you a higher returns. So the rules of the strategy for option selling, let's see what is the rules of it. So the rules are almost similar to option buying, but only difference is instead of buying, we are going to sell here. And when we are buying, we are waiting for the range high to be broken. Here we are waiting for the range low to be broken. So the same thing where I've mentioned one lot position as sell, and I've mentioned option type as call option, and I've mentioned expiry as weekly expiry. And you can test or you can back test this strategy using algo test platform. That is the platform I've used. And the entry criteria I've selected at the money options, and the stop loss same whatever we use for stop loss for option buying, we are using same stop loss for option selling, which is 50%. And again we are using the same trailing stop loss method here, which is whenever there is a 50% increase in the price in your favor, we are increasing the overall stop loss to 50%. And the range breakout again we have given from 9:15 to 10:15, this 1 hour. Same for the put option also. So here you are just observing what is the ATM strike, and when that ATM strike low is breached, you are just going to short that call option. Say for an example, you are observing what is the call option's high and low price. When that call option low is crossed, you just short that call option. Similarly, you are checking the high and low price ATM price of put option, and ATM price put option low is breached, you just short that specific put option. This is the overall idea behind option selling system using the range breakout mechanism. So if we go ahead and test this specific strategy in the algo test platform, let's see what would be the overall returns. So with algo test platforms provides you a free back test options also. So you just have to feed in these conditions and run the back test, that can give you the overall results. So when I combine both option buying and option selling system, this is the overall returns it has made. So it has made approximately 6 lakhs plus overall profits from 2017 to 2023. So option buying to plus option selling, when you mix it together, the returns are much better than the option buying system. So this is the drawdown chart of the option buying plus option selling system. When you mix it together, it has a maximum drawdown of approximately around minus 1 lakh, and most of the time the drawdown is around 20,000, and even this 1 lakh of maximum drawdown which occurred in 2022, that was totally recovered. So the system is still in profitable mode, and when you add option selling and option buying, let us see what would be the overall monthly and yearly returns would look like. So this is the overall returns of the combined strategy of option buying plus option selling, where it has given a pretty decent returns, where 2017 it has given 36,000 of overall profits for one lot. 2018 it is almost doubled, which is 66,000, and 2019 and 20 it has given more than 1.8 lakhs of profit in each of the year, where the maximum drawdown is also relatively much lower. And 2021 it was approximately 64,000, again similar to 2018 returns. And by 2022 that is the lowest returns of all the years, where 2000 year 22 was not a very good year because of a low VIX regime, where the maximum drawdown is at almost 82,000, but still that has recovered from the drawdown completely. So that is the biggest plus. For 2023, again, the overall profit till date is approximately around 70,000 of overall profits for one lot, where the maximum drawdown for this year is also much lower, which is approximately 24,000. So instead of trading it as a standalone option buying system, when we mix it together with option buying and option selling, the overall return increases, and the drawdown is also comparatively much lower on most of the times, and overall returns to maximum drawdown ratio is also relatively higher. And the best part is the days which it has been in maximum drawdown is relatively lesser most of the year. If you see this year 2023, only 26 days it was in maximum drawdown. So only 2021 and 22 it had a higher larger maximum number of drawdown period was higher, but most of the other years the number of drawdown period is relatively lower. So this is the comparison chart between option buying and option selling, where I mentioned here range breakout 1 hour and range breakout 1 hour sell, where you are able to see the segregation of overall profits. So the 3.47 lakhs profit came from option buying, and 2.7 lakhs came from option selling. and this is the overall metrics, where if you mix it together you are able to make 6.25 lakhs of overall profits with a winning accuracy of approximately 48%. So instead of trading it as a standalone strategy, by mixing it together you are getting a good result. But also make sure that the overall drawdown capital itself is approximately 1 lakh. So if you are trading with just 1 lakh of capital, that would not be sufficient enough to handle the maximum drawdown. So it is wise at least to trade with 2 lakhs per lot in order to trade both the option buying and option selling system, so that you will have enough capital left with to handle the maximum drawdown. So these are the option buying and option selling system rules and its performance. I hope you found the strategy really helpful. In case if you wanted to fine tune the strategy, where if you wanted to change the stop loss instead of 50%, if you wanted to change it to 25%, or if you wanted to change the trailing stop loss from 50% to 25%, you can make all this. And also, instead of using a range breakout mechanism where I've used from 9:15 to 10:15, you can change from 9:15 to maybe 11:15 also. So you can wait for 2 hour range breakout to happen, and then you can backtest it. So you can modify all these parameters. So we can take the core logic which I've explained and modify the respective parameters and backtest it by yourself in the AlgoTest platform, so that you would be able to build the strategy by yourself. So this way you can compare what would be the overall returns of the strategy which you build versus the strategy which I have shared. So this way you will have a clear idea, okay, how the overall performance has been. So if you're able to make any specific modifications with respect to stop loss and reduce the maximum drawdown, that would be really beneficial also. So you play around with these parameters and try to change it and see how the overall backtest results would look like. So make this as a kind of a comparison strategy and try to fine tune this, so that the overall risk can go down and overall profitability can go up. So this is what I want to convey in this video. I hope you found this really helpful. I'll see you guys next week with another video.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.